Good afternoon, it's 12:37 p.m., Thursday, January 2nd, and this is the macroeconomy update relative to our business cycle model and a portion of the Posson report, and this is Richard Posson. Okay, let's take a look at a chart that I found at the St. Louis Fed.org, in other words, the Federal Reserve St. Louis website, and this is of the real GDP. And this is a chart, so you can see how the economy grew, real GDP, and that looks similar to our nominal GDP per capita charts. But what I want to point out is this next chart I'm going to show you has similar characteristics from 1990 to current. Notice the real GDP is above the financial crisis, well above it now. Okay, or I should say the high during the 2000s, before the financial crisis. So the economy is fully recovered and moving to new highs relative to the value of it, the size of it. What we're probably experiencing, however, is slow rate of change compared to other times in history. But it almost looks like it's starting to speed up a little bit here. Okay, so that's it for that chart. Let me close that out. And I want to show a chart made from the PMI manufacturing, procurement manufacturing indicator or index that's put out by ISM. And what I do is I have a formula that if it's at 50 or higher, add it because the economy is growing. If it's under 50, subtract it because the economy is slowing down, contracting. Actually contracting, I shouldn't say slow down. Now, at 45 or lower for the PMI, I normally assume we're in a recession, but it has to match my cycles, or I may not call it as a recession, or I may call it as a secondary recession or something. At any rate, this is an annual bar chart of the monthly PMI number produced by ISM. You can find it on any financial website. It's released at the beginning of every month. And today, they put it from 57.3 to 57. So just a little tiny blip down. I think it's meaningless. And we got a larger uptrend still underway. But as we convert that to this, what I call economy trend indicator or eco trend indicator or Posson eco trend indicator, you can see we correctly called a recession bottom in 2009. Well, I guess I don't show evidence of it, but we actually called it within, I believe, a month of the turn of this indicator and of a bottom of PMI. Now, maybe from other economic calculations, you can say it didn't bottom precisely with that indicator or these indicators, but sometime in 2009 it bottomed. At any rate, relative to these specific indicators, we were in like a month of the bottom. Okay, and the only reason we didn't catch the top in 2008, we were just a month or two afterwards. That's when we actually designed the eco trend indicator and decided to use the PMI for more than just month-to-month evaluation and long-term trends by itself. What this eco trend indicator does is it filters out some of the shorter-term noise and allows us to focus more on the 9-year cycle. And the 9-year cycle basically means that the economy bottoms with a recession about every 8 to 13 years. I'm tracing out bottoms now that are labeled with recessions. And then there's a peak to the boom trend every 8 to 13 years as well. And we just call it a 9-year cycle. It may actually average near 9-year. We have quite a few markets that actually average near the 9-year label that we use. But really, the 9-year is just a label. Now, it may relate to the juggler cycle that some economists use and was used by economist Schumpeter in his business cycles book, where he's basically explaining our business cycle model. Even though I discovered it on my own, I later learned that he had already discovered it. He just didn't give it a name and didn't do a hard sell of it, in my opinion, in the book. And what we've done is expanded and improved upon that model. At any rate, you can see we've been right that the economy has grown since 2009, all-time new record highs. But if you recall back to that website of the Federal Reserve, it's similar from 1990 till now, to current, as with the real GDP. And what we learned a long time ago, there's actually a very strong positive correlation to nominal GDP per capita. So I only follow nominal GDP per capita once a year. We'll be updating it next few months probably for 2013. But I'm fully anticipating a new record high for that as well. At any rate, the best forecast is that the next 9-year cycle top is due 2017 to 2019. So we feel manufacturing will continue to prove and grow into that year. And then using this as a representative or some kind of indicator of the economy is going to grow to them. And so no recession until probably a year to 3 years after that top, somewhere 2017, 2018, starting all the way out to about 2021. And we'll have about a 1 to 3 year contraction of recession. It'll be just a standard recession. There are no super cycles due to cause a depression or great recession. So it's just going to be a standard recession similar to those going back to 1950, although you might want to throw out 1982, and you'll obviously throw out to 2008, 2009. But just a standard recession, we'll manage it. It's a correction with our economy. Look at this. This is just corrections, these decade recessions, just corrections of the economy. The overall trend has been up since the 1930s, Great Depression, and by other measurements, since the founding of this country. Now this is the manufacturing PMI from ISM monthly line chart, and we try to show some 3-year cycles, which are sometimes difficult to call. But the best forecast is it's probably the PMI won't necessarily trend higher into 2015, but I think it's going to be on the upper end of the range. Current levels, maybe a little lower to somewhat higher, going into 2015, and that just means the eco trend indicator, real GDP, and nominal GDP per capita should continue to go higher. The economy continues to grow. Now, there is an alternate script that can allow for a top now, but the fascinating thing is that the model research just says, well, then it'll just trade sideways into 2015. The economy is still going to grow, but maybe not at a rambunctious pace or an aggressive pace, but it's still growing to 2015. So we're kind of discounting our timing of tops here. We think the more important feature is that in 2013, a 3-year cycle bottom was placed. And this is now in line with the forecast for growing economies until 2017 to 2019. By the way, you can look at PMIs for around the world and come up with the same concept, that they follow the same cycles. They may bottom and top at different years, different times of year compared to the U.S. But in general, the macroeconomy, we're bullish macroeconomy relative to these business cycles to 2017, 2019. Europe, China, Asia, South America, all of them. If they're not already on board, they're coming on board. And we think Europe probably bottomed for a recession during 2013. Many other countries, including the U.S., bottomed in 2009. Okay, this is industrial production, U.S., an index. Got it from the Federal Reserve. Biggest collapse since the 1930s for this index. In fact, I don't know if it actually goes back to 1930, so we'll say the biggest collapse for the history of it. At any rate, you can see it's now approaching. I didn't check to see if it's actually violated the top, 100.742. Yes, it even violated. So we got a new high, finally, for the industrial production index. It had been lagging. It will trend higher now to 2017, 2019, and then a little bit of dip for a recession. U.S. payroll, big setback. Employment's improving. Still has a way to go to get back to 2000's high, but it's still improving. It'll continue to improve to 2017, 2019. Then we'll see a little uptick in unemployment for a recession. But it's not going to go as high as the unemployment of 2008, 2009, 10, whatever it was. Okay, here's our unemployment. You can see the 9-year cycles. Just like clockwork, working very well. Top the earliest allowed, kind of difficult to have caught that top, but we were already calling for a bottom 2009. Okay, the real bottom actually comes out about 2010 for the unemployment, but it's a truncated, top for unemployment. So you can see we had an objective here for a 3-year cycle. We were just curious. It's very experimental for us. We were almost right. Okay. And actually, if I convert that to monthly, now that I think about it, if I convert it to monthly, it actually says we were right. It came down into it because this is just the 2013. Okay, so pretty close here. The annual just kind of distorts it a bit. The monthly chart would say we're right. At any rate, what's more important is we're not really going to try that hard to find these 3-year cycles. They're very difficult to find. You can see these 9-year cycle trends are very strong trends. So the bottom line is lower into 2017 to 2019, lower unemployment that is, therefore higher employment, growing economies. What we're suggesting is it may only go to 5.5% to 4.5%, but it could go all the way to 4%. But we're also suggesting that we could have even a new record low in unemployment and not have a true record growing economy. And we can also have unemployment around 5 to 5.5%, which some people would think is still kind of high, and we could actually have a better employment or a better economy than you think. So use this as just a general guideline. And so if you want to check out foreign PMIs, you can go to look up do a web search for market, and you'll find various reports put out at the beginning of the month for various countries around the world. So that's it for this update for this month. Basically, we think we're off to a good start for 2014 here. We don't see any reason to change our opinion that the economy will grow to 2017 to 2019. But there will be hiccups along the way. The 3-year cycle will come in to create a correction for a few months to even a year at times, some kind of slowdown. That's all it should be, is a correction. And at least looks to us that at least the first half of 2014 will be a net growth year. I'm going with the idea that even if the stock market corrects late 2014, and it could, that basically 2014 will be a net growth year. We're still looking for improving economy, maybe even a faster paced economy, especially on a global basis. Thank you.